Welcome back to Smart Wealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. Dave, I have a hunch that our listeners are going to be calling in droves today. Make sure that you write this number down because you're going to need it. 509-32-SMART. That's 327-6278. Make sure if you're calling from outside the Spokane area that you use that prefix 509-32-SMART. That's 327-6278. I'll tell you what, Dave, I am so excited about our guest coming on here. David Morgan was with us just a couple of weeks ago, and we had a ton of callers. It was amazing.
Right.
So it was a lot of fun.
Mm-hmm.
And I can understand why people are, excited to look for different ways to, invest their money that they're pulling out of the stock market. And there are some people that are getting out of the stock market. We are not in a position to encourage them or advise them to do that. But the fact is, there are people that are moving out of the stock market. Well, what do you do with that money? Well, one way is to invest that in precious metals that you can hold, touch, look at, store in your safe at home, whatever. So That'll be cool to have him on. But before we get to that, we have a 12 Keys to Financial Certainty. And this is a really good article. It'll be up on our blog, but listeners can also get a copy of that by simply emailing steve@smartwealthradio.com. Again, that's STEVE @smartwealthradio.com. You can simply put in the subject heading 12 Keys. And Dave and I are going to give you those 12 keys now, but the article is, oh my gosh, it's probably 18 pages long. So you'll get all of the facts, all of the in-between the titles. So the first key is to become educated about how money really works. If you want to take control of your financial lives, then we need to spend some time and effort to learn the truth about how money really works and then apply what we've been learning to our own lives.
And the next key is to understand that many of the things you think to be true about money are not.
Key number 3 is to understand that the financial environment is constantly changing and that you must learn to adapt your financial plans.
And key number 4 is to identify the wealth transfers in your life and then take steps necessary to reduce or eliminate them.
Key number 5 is to reduce your financial risk to the lowest level possible.
Key number 6, how you save and invest your money is more important than where you save and invest your money.
Key number 7 is to understand that spending is emotional, so budgets generally don't work.
And key 8 is when you track your money, you control your money.
Key number 9 is a big one for many people, and it deals with the topic that we often don't like to talk about, and that is debt. We really should have some echo on that, don't you think? Debt.
Key number 10 is understanding that money in motion creates more money.
Key 11, virtually every dollar can be strategically positioned to be recycled and to do more than one job, creating multiple benefits.
And key 12, the final one, is that every financial strategy or product must create maximum liquidity, use, control, certainty, and enjoyment of every dollar during your lifetime, and then leave the maximum amount to your heirs.
So to get a copy of these 12 Keys to Financial Certainty, the entire article, about 18 pages long, send a quick email to steve@smartwealthradio.com, and in the subject line, simply put 12 keys, and we'll make sure and get that out to you right away. Well, Dave, our guest coming up here is David Morgan. He is actually internationally known and has created the silverinvestor.com website, and he originated the Morgan Report. By the way, that's silver-investor.com. If you want to go to that, silver-investor.com. He has a monthly newsletter called The Morgan Report, covers economic news and overall financial health of the global economy, currency problems, and, of course, the key reasons for investing in precious metals. So, wow, this is going to be awesome. When you first hear David, or if you heard him just 2 weeks ago, and you didn't call in, you missed out on getting a really really great book. So David Morgan and Chris Marchese wrote this book, The Silver Manifesto. This is the Bible here of silver and precious metal investing. And it's about a $30 book. But if you're one of the first 3 callers, you will get a copy of this book for free. For free. Don't you love that word? Free. Yeah. You'll also get David's really cool business card, which is actually made out of stainless steel, but it looks like silver. It's a really cool, that is the sweetest business card I've ever seen. And then also a very quick card that talks about getting your email address and getting started on the Morgan Report. So all of that available when we give out the next phone number right after these important announcements. Welcome back to Smart Wealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. Talking about being smart, our engineer is giving us some silver and gold music. Yeah, I remember that from the Rudolph the Red-Nosed Reindeer show, wasn't it? Burl Ives. And there's a lot of people that are wanting silver and gold these days, and they're dreaming about it, thinking about it, and they're looking for ways to place their money that's not at risk in the market. And, of course, silver and gold has its own risk, but it is tangible. You can hold it, touch it, look at it, put it in your safe at home. So those are cool things. By the way, Dave, later this morning, I'm going to be up at Silver Mountain. My wife and son and I are going to go enjoy some time, do some downhill bike riding and use the gondola and all that type of thing. So this is really a big silver producing area. It was at one time. So that's cool. That's very, very cool.
They've got some great bike riding trails up there.
And it kind of made me think about some of our investors that are in the market and going down the hill at a very rapid rate in a scary two-wheeler. It's kind of interesting.
Well, there's a lot of uncertainty out there. So
there is a lot of uncertainty. And hopefully we can bring more certainty to our listeners today. We have a ton of listener questions, and we're just going to take them one at a time, kind of in random order. But David Morgan, welcome to the show.
My pleasure. Thanks for having me back.
David, first question I have is, a few days ago, a financial advisor said to me, he said, silver and gold is not important to have or own. They haven't used silver or gold since the Roman Empire, and the U.S. dollar is really strong right now. What would you say to that?
Well, factually is incorrect. I mean, the facts are that silver coinage was in circulation, 90% silver coins, up until and through 1964. And in 1965, they went to what I call the Johnson slugs. And then on an international settlement basis, gold was used as the only settlement used nation state to nation state up until August 15th, 1971. Now, let me go a bit further, Dave, and add that a lot of people accepted U.S. currency, but you could settle in gold. And Charles de Gaulle's main economists recommended that rather than take the paper, they would submit the paper by contract and receive gold, and they did. And it started to drain the gold window significantly. And this is when Nixon really had no choice other than to close it, quote unquote, temporarily. Of course, he closed it permanently. So he's inaccurate as far as how long we've used gold and silver. It's been till, into my lifetime. And as far as I would ask the opposite question, what currency has lasted, more than a couple hundred years, whereas gold and silver have been used as money for thousands of years?
Very good.
Really good question. So here's another listener question. David, it seems you kind of more favor silver than gold. Is that true? And if so, why?
Well, I'm slightly more favorable to silver, but it depends on an individual case-by-case basis. Silver is more volatile than gold is. So depending on the person's wishes, what they really want to do with their asset portfolio, they might favor gold over silver. For an example, if you were older and you didn't want to ride out the volatility that silver has naturally, you would stick more to gold. But I think all people should have a precious metals exposure, and I think almost all should expose themselves to both metals, silver and gold. as we've talked about privately, Steve, I look at gold as being a component as a blue chip, like a component of the Dow Jones Industrial Average, and silver being more like a high-flying NASDAQ stock. And I think that's a pretty good analogy. So I think you should have both, but measured. In other words, if you're older and you really don't like the ups and downs, have more gold than silver. And if you're young, aggressive, and really can ride out the volatility, go ahead and load up more on silver than gold.
Yeah, good question. Now, Dave and I were chatting earlier this week, and you had given kind of a rough percentage of how much of a portfolio, an investor's portfolio should be in precious metals. And if I remember this right, and I'm going to try and quote you, that you figured about 10% in physical metals, and then about 10% in mining stock. Am I correct on that?
Yes, you are, Steve. And the very beginning, when I was asked to write the investing rules for silver investing in the Investing Rules book published in the United Kingdom more than a decade ago, I left it total of 10%. So it could be all physical. I would never recommend all mining stocks. I mean, I very much advocate having physical metal first and then mining equity second. But I'd say within about 3 years of writing that book, I upped it to 20% because at that time, the world conditions were getting toward being more unstable than they were 3 years previous. And that was over a decade ago. So in my view of the world today, we're certainly much, much more unstable than we were a decade ago, which means I think the 20% figure is a maximum. But I do think that everyone should consider having a 10% minimum in physical metal.
You know, one of the people I follow, he did the same thing. He said 10% traditionally, but because of recent events, to move that to 20%.
And didn't he also say, Dave, to then beyond that 20% have about 30% in equities and then 50% in the kinds of things that you and I teach people about?
Yeah, that's a different publisher, but in that one they say 20% gold, silver, 30% individual stocks, and 50% in a 770 account.
Right. And if our listeners don't know what a 770 account is, send me a quick email with the subject line 770-770, and I'll send you an article about that and also our 7 smart wealth strategies and our 5 bonus strategies, just to give you an overview of what it is we're talking about. You may be new to our radio show, and some of this terminology is a little, unfamiliar to you. So feel free to get caught up to speed and ask about the 770 account, and you'll learn how you can grow money tax-free, have tax-free access, and if you prematurely die, your assets will blossom and grow and be passed to your heirs tax-free. But that's another subject for today. We're dialing in on that 20% of silver, gold, precious metals of a wide variety.
What is the best place to buy silver and gold and at the right price?
Well, there's several places to buy silver and gold, but at the right price. I need to comment on this because I've been in the precious metals arena for 4 decades, and certainly not the level I am now. But when I started looking into monetary history and economics, et cetera, I was very favorable to what at that time was called the honest money movement or honest money. And I give that background to say this. In all of my years, I've never seen a stranger market, and I choose that word carefully because the actual facts are that and I just did this recently. I used to make it about every other month where I would call the biggest wholesalers and retailers in the country, and I know many of these people on a first-name basis, and they know me. And I would ask them, what is the supply like? What's the constraints? What's popular right now? In other words, getting a gut-level feel for the market. And I would do it with several, so I didn't just get one input. Well, I did this recently, and across the board, I got words like the silver market is locked up, or it's very difficult to source product, or I don't understand it. I have to wait 4 to 6 weeks to get any allocation whatsoever.
Well, David, before you dive deeper into that subject, let's take a break for some quick announcements, and then we'll talk more about that after the break.
If you have some questions about your upcoming retirement or are not sure you are prepared for retirement, please give Steve or Dave a call. They can help answer your questions and provide a free consultation about your retirement preparedness. To set up a meeting time with Dave or Steve, call 32SMART. That's 327-6278. Make sure you are prepared for retirement and can survive the stock market roller coaster.
Welcome back to Smart Wealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. Well, listeners, today we're learning about the health of silver and gold, and we have a special guest today for those that are just now joining us. David Morgan is the author of The Morgan Report. It's a really, really cool email newsletter that you'll want to subscribe to. But if you'd like more information or if you'd like to get a copy of David's book, just give us a call at 509-32-SMART. That's 327-6278. If you're one of the first three callers, you'll get the book for free. If you're one of the callers after those first three, you can still buy the book at a substantial discount. And you can give us a call and we'll get back in touch with you and let you know if you're one of the first three callers or not. So either way, the book is like a $30 book, and there's probably another $5 shipping and handling on top of that. So even if you got it for half price or a third of that price, it would be a steal of a deal, Well, right before the break, David was about to dive into this whole subject of, where to buy silver, where to buy gold at the right price. So, David, if you'll go ahead and continue.
Number one, if you're very attuned to the silver market, one of the best leading indicators that you can see is what's called the coin market or the junk bag market or the bag market. And in that market, that's the 1964 or previous silver coins I mentioned on the opening. And those sell by amount of coinage. In other words, there's $1,000 face value that can be dimes or it could be quarters or it could even be 50-cent pieces. But it's $1,000 face value. That's called a full bag. And then 500 is a half bag, and obviously 250 means a quarter bag. That market is locked up at the wholesale level. The premiums right now are $4 to $4.50 over spot, and the dealers can't get them.
How much over spot?
$4 to $4.50 over spot.
Wow.
And it can't be found.
Yeah, and I've heard that in one state they can't even get it.
Well, let me go on. That's the bag market, which is a very small portion, but it's usually a pretty good leading indicator. When premiums go high on the bag market, usually you're going to see the price of silver come up shortly thereafter. Second thing is government minted coins. Now, there's a great amount of the population that doesn't want to buy a privately minted medallion. They really don't want junk bags. What they want is they want a government-issued and minted silver 1-ounce coin.
Okay.
And these come from the United States, Canada, Europe, Australia. They're across the board. And they pay a premium for those. In other words, it costs a bit more than if you're buying in normal conditions, junk silver or, let's say, a silver round. In these cases, we have the inability to meet the demand. And all of these mints across the board from Canada to the U.S. cannot meet the demand, so they allocate what they have. And so if you're a primary dealer, they tell you instead of, well, you want X amount of boxes of silver coins, you're not going to get X, you're going to get 50% of X this month, and the next allocation will let you know when they're coming. So the subset of that is just across the field. The Sunshine Mint produces a great deal of the planchettes or blanks for that industry. So if you want to get a product minted by the Sunshine Mint, in other words, they're going full bore making blanks for the U.S. Mint to make silver eagles. But if you want to buy a Sunshine round, which is one of their products, it's a premium product. I love their rounds. You have to wait 12 weeks to get those. So I think that gives you a very compelling description of how tight the market is, and yet we're seeing these very, very discouraging prices in the silver market.
Right.
Okay, thanks for that, David. And you didn't mention it, but people can also go to www.silver123.net. And I believe that's a website that one of your friends put up, and you can buy silver kind of on a monthly basis if you want, even invest $100 or $200 or $1,000 a month. Isn't that right, David?
Absolutely. Yeah. It's a dollar cost averaging program. Basically, it's debited from your checking account, and it's a good way to save silver over the long term, or gold. You can do even platinum or palladium for that matter.
Right. And you can also own silver and gold inside an IRA, right? Physical silver, physical gold.
Yes, you can.
Okay.
You probably heard those ads on the radio. Is that what made you think of that, Steve?
Indeed.
I will say, though, we're probably the only financial radio show that says that having some silver and some gold is not a bad thing.
Well, you know, Dave,
Instead
one of the
saying
reasons
buying those 12% mutual funds.
Yeah, one of the reasons why is because we're just not a one-trick pony. We don't have one tool in the bag, and we're genuinely interested in making sure that people are doing an excellent job of caring for their money. But one of the things that's intriguing to me about owning silver is that it not only is numismatic, and you can buy it as as a raw metal, but it's used in industry all over the place. So, David, one of our listeners said, "So, what about the industrial use of silver as a metal?"
Well, the industrial use of silver continues to grow, but it's actually flattened out for probably the last decade. Let me explain. If you go back about 15 years, the amount of silver used in industry was about 35% of the market. Today, and for the last decade or so, it's been about 50% of the market. So it had a big increase, and the increase was basically from the commodities boom that started in 2000, where you had China basically as the engine for the commodities boom. But during that time, you also had an electronics boom, where we started to go from, a desktop computer into more laptops. And I know they were earlier than that, but the point I'm making is that you started more and more mobile devices, laptops, iPads and pads, cell phones, and DVD players, and all kinds of electronics. And this was a big demand on the silver market, very small per unit, but very large in scope, with billions of people owning cell phones today. So that drove this market to a new level. But as I said, it's pretty much leveled off. And part of the reason it's leveled off is there is a great deal of silver that does end up in landfills, but there's also a great deal of silver that ends up being recycled. In fact, I used to make the point that recycling a cell phone wasn't worth it for the silver in it. And luckily, I was making a correct statement in the early 2000s. But with the smartphones, they contain gold. And the amount of gold in a cell phone on a per ton basis is about 3 grams of gold per ton with a smartphone. We mine all over the world at 1 gram per ton.
Wow.
So you're actually better off using e-waste and mining gold from that aspect than you are perhaps in some of these open pit large mines run by some of the biggest mining consortiums in the world, believe it or not.
So you can be mining your smartphone.
Absolutely.
I love it. That's great. So if you're really going to mine a smartphone, David, then that makes sense that I've seen these smartphone kiosks where they'll buy your cell phone from you. And now I know why. There's this gold and maybe some silver in there too.
Absolutely. When you're going to melt it down, you're going to get every metal out if you can. So, gold, you're going to get 3 grams per ton, and you're going to get some silver along with it. You might get some copper, you might get some exotic metals as well. So certainly those kiosks know what they're doing.
So what would a price of a gram of gold cost today approximately?
Well, there's approximately 32 grams per ounce, so you can do the math. It's a tenth of that. So if you have $1,000 gold, and you can divide 30 into that and take 3 of those, and you've got the price.
Interesting. Well, if you'd like to get a copy of David Morgan's book, The Silver Manifesto, David Morgan and Chris Marchese wrote this together. It's a $30 book, $5 shipping and handling. If you're one of the first 3 callers, we'll put it into your hands for free. Or if you're not one of the quick ones to call in right away, you can still buy the book at a substantial discount. And as a matter of fact, David, I think you said that we've got a 2-week waiting period because this book has been so hot that we have to go into a second publication of it. Is that right?
Yeah, we keep running out on Amazon, and we don't want to overload them and have thousands of books there that aren't selling. So we're pretty careful. We just ship about 250 at a time, and they go pretty quickly. So we're very happy that, especially in a down market, there's still the popularity of the book. And we feel strongly that once the silver and gold markets pick up, there's going to be more demand for the book.
Well, good. And so right after these important announcements, we'll chat a little bit more about this whole subject of investing in precious metals. Dr. Jim Goff talking about his experience working with True Wealth Financial and Altmeyer Strategies.
Hi, I'm Jim. I am a physician here in Spokane with Rockwood Clinic. Well, I first met Dave early on when I first came to Spokane. He's very knowledgeable about his business, and he is patient and willing to do things on your time and not on his. Probably most would agree that some diversification across maybe several different types of products or approaches is appropriate. And I would certainly recommend Dave to my colleagues, friends, to at least take a look and see what he has that might help them in retirement planning.
Dr. Goff, thank you for your kind words. This is Steve Minnick. If you have questions about your retirement and want to get off the Wall Street roller coaster, call me at 32SMART. That's 327-6278, and find out what we can do for you. True Wealth Financial, 327-6278. Welcome back to Smart Wealth Radio with Altmeyer and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmeyer.
And this is the show where you're learning to be smart about the health of your wealth. Well, if you haven't called in yet, then you might not be one of the first three callers, but you can still call and get a discount on David Morgan's book, The Silver Manifesto, that he wrote with Chris Marchese. The book is about a $30 book, $5 shipping and handling. You can get it for about half price. So do give us a call at 509-32SMART. That's 327-6278. If you're outside the Spokane, Washington area, make sure you use that prefix 509-327-6278. Dave.
Now, David, we were talking about industrial uses of silver, and I've read that with the solar market that if this could really kind of take off, we start using more solar power. Is that correct?
Yes, it's correct, but it requires a bit of explanation. Yeah. There was a study done on, I think it was a 10-year projection on silver usage across the board done by Jessica Cross in the UK quite some time ago, and I studied her study. And what she stated was in the solar industry, we were going from, I think, something like 20 million ounces on an annual basis up to about 2014, 15 to 140 million ounces on an annual basis. So what happened? Well, actually, we went on that projection for a few years, and then we flattened out to right now around 70 million ounces on an annual basis. But I need to add on that there is a new company that will be featuring in the Morgan Report in the following months. In fact, I actually know one of the principals of the company, and I'll be interviewing him for our report. And it's a company that will be using aluminum in place of silver. So the potential is it could be a game changer. It might not. It's really hard to say. I mean, I'm partial to silver, but I also try to be objective. Nothing reflects light better than silver. Nothing conducts heat better than silver. So to replace it with aluminum, you might get less performance, and then it becomes an economics question. With silver at this price, and it does so much better job of conducting heat and electricity, is it worth to replace it by aluminum? My gut level guess is that it won't be viable at this point in time due to silver's low price. In the future, it may become so. Also, any new technology like that usually takes longer than they think. And this gentleman I'm referring to that we'll be reporting on after the interview in the Morgan Report told me personally that it's going to be at least 2 years. So if you're investing in silver because of the solar situation, I wouldn't fret about it for a while, Dave.
Yeah.
So, David, a few weeks ago, you were our guest on the radio show, and I was so inspired, I went out and got a substantial amount of silver myself. And the spot price at that time, a few weeks ago, was $15.30, and I was able to get that not too much over that. And now the spot price is about $1 less, but you still have to pay the same amount for that silver. Why is that? Why is the margin still going up.
Yeah, the premium on all products, bags, coins, rounds, bars, has all increased, and that's because the availability of the product is very, very difficult to acquire on the retail level, meaning that anything I just named that normal investors buy is very, very difficult to source. And the only way you get it, like anything, is you have to bid the price higher. So the bid actually comes up on the amount of premium that the customer has to pay. And this upsets people because they call in, they see this, price in the paper. They don't know that that's a commercial bar. They don't know what the difference between a retail product is in a commercial bar. So they get this idea that silver is at, let's just pick a price, $15, and they call their dealer and he's saying, well, I need $17.50 for that. And they go, wait a minute, the price in the paper says it's $15. He goes, well, and then they may explain it, they may not explain it. But the point being that the premiums are going up across the board. The only place that you can buy silver at that price that's in the paper, which refers to the commodities exchange, is either on paper, or if you are willing to stand for delivery, then you can get it at that price and additional fees. There's a couple fees, there's transportation, there's stuff involved. So if you bought it at that theoretical 15, you might get it to your front door at maybe $15.50 an ounce or $15.30 an ounce. Depends on the quantity, depends on what shipping service you use. UPS would be different than if you use an armored car and that type of thing. I'm just trying to be very clear here. Yes, you can buy silver at those low levels if you're willing to buy in 1,000-ounce increments.
And that really wasn't the main reason why I bought silver. I was encouraged to buy silver not because of where it goes from here, and it may go up, it may go down. I get that. But it can be used as currency. And if we start hearing the swirling sound, which we kind of do in our economy, things may be going down the toilet pretty soon. It's hard to say. But I checked with a couple of a cafe I go to about once a week, and I showed them a 1 ounce silver round, and I said, today this is worth about $16. If the price of silver went up to, say, $70 an ounce, and we had hyperinflation, and you had to charge $50 for a meal that you used to charge $15 for, would you still take that silver coin or silver round? And she said, absolutely, I would take that silver. And so to me, that said, okay, I can use this to transact normal business. Gold, maybe not so much, because the value of the coin or the bar, I mean, can you imagine? Let me just scrape off a little gold here. Do you have your weigh station? Well, it doesn't work quite as handily. So where do you think silver goes from here, David?
Well, I think it goes higher. I think we probably double bottom, but I've been wrong before. I'm better at calling the tops than the bottoms. At least that's been my record so far. But nonetheless, as you state, Steve, it's really not a bottom-picking game. That's an amateur's game. Anyone that wants to pick a top and a bottom in a stock or a commodity or any type of financial instrument, good luck. Yeah. Certainly I've had some success there, but that's not how I run my business. I look at the fundamentals and the technicals, and I reach a conclusion. And I think the best thing for most people is to acquire the right amount for them and sit and hold. As you said, there may be a day where we're really, really grateful that we own that silver for a variety of reasons. And I look at it as more of an insurance policy, because an insurance policy is something happens. For example, homeowners insurance, you have an insurance against a fire. So if fire happens, you collect the insurance. That's really not the case with silver and gold. I mean, if you have it bought for, paid for, and let's say there's a technological boom and there's more silver being demanded, you could have a robust economy and still have made a great investment. So it's not insurance only, in my view. I get a little bit, I wouldn't say upset, but concerned that people just have this one idea about these metals, and particularly silver, because it certainly is a better good time metal probably than a bad time metal. It actually serves both purposes.
Excellent stuff. Well, we're going to dive more into this after these important announcements.
Greg and Ann talking about their experience working with True Wealth Financial and Altmeyer Strategies.
I'm a physician. We've lived in Spokane for the better part of 30 years. My wife, Ann, and I both work. We're in our late 50s. We wanted to look at some options that kind of eliminate some of the whims of the stock market. Primarily trying to mitigate risk.
The part that's invested with the program that Dave actually talked about is dependable, and that feels nice. I absolutely would recommend talking to these guys.
I've already referred a coworker and a friend to Dave and Steve, so I'm very comfortable suggesting that other people see them, primarily because I think they'll have the same experience we did.
Thank you, Greg and Ann. We appreciate your kind words. If you have any questions about retirement, call us today, 32-SMART. That's 327-6278, and find out what Dave and I can do for you. True Wealth Financial, 327-6278. Welcome back to Smart Wealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. Listeners, you can still get a copy of David Morgan's book, The Silver Manifesto. We've got more than 3 callers now, so you can still give us a call at 509-32-SMART. That's 327-6278. But, you'll get the book at a discount, and the folks that got it for free have already called in. Well, right before the break, David, you made an analogy to buying silver, kind of like homeowners insurance, and I wanted to remind our listeners that Dave and I have a plan B, and it's called the basement. And we use an analogy of a 3-level house where you've got a basement, main floor, upstairs. Basement is all the safe stuff, which, by the way, would include physical gold, physical silver. The main floor are all of your income strategies. The top floor are your investment strategies. Sadly, too many people put everything in the top floor, and they've got this floor under a roof floating 20 feet above the ground and casting a very dangerous shadow. But you mentioned that silver and gold, physical silver, physical gold, can be like an insurance policy. And there are a number of different wealth protection strategies that we have in our basement, our Plan B strategy. And that would include car insurance, homeowners insurance, life insurance, health insurance, all of the rest. But we're insuring our wealth. That's a basement strategy. And silver and gold is also a basement strategy.
So, David, what are your thoughts about silver market manipulation?
Well, they're vast, and to really go into the subject in depth, I think anyone that really, really wants to know my views and my study on the situation should buy the book. It's a shameless plug, and I realize that, but on a radio show to explain it all and where it makes sense to someone that hasn't got the background or foundation on how markets work and how the futures market differs from the physical market, it's really a tough one to do on the radio. But I'll give a quick overview. Basically, there's several markets around the world in almost anything you wish to discuss. It could be not only the commodities markets, but it could be in the stock market, et cetera. So there's the physical asset, and then there's the derivative of that asset. So in gold and silver, as an example, there's the physical market, and those are 2 categories. There's the commercial category, which is in gold, 400-ounce bars. And on the retail side for gold would be your 1-ounce coins like a Krugerrand, or maybe small 1-ounce bars, or maybe a kilo bar would still consider a retail product on the gold side. On the silver side, you have the bag market I've discussed. You have 1-ounce denominations, either government minted or privately minted. You have 10-ounce bars and 100-ounce bars. So that's the physical market. On the retail side, on the commercial side, there's what's called 1,000-ounce bars, and they're never 1,000 ounces, or very seldom. They are poured in usually roughly that amount. The amount of silver in those bars is guaranteed 999 fine by the refiner, and its weight is also stamped into the bar, and usually it varies, but it could be something like 998.20 troy ounces of fine silver, or an over-poured bar, it could be 1,000 and 2.32 ounces of fine silver. So you got the idea. Now, what takes place on the manipulation is that all markets move on supply and demand. But the problem with the futures market is that the supply side could be inundated with the amount of paper silver or paper gold. And this is true not just in the precious metals, it's true across the board. And so the demand side might be X, and a lot of that demand, let's say up to 70 or 80% of that demand, is fulfilled by a paper contract that says, yes, we'll meet that price at that time. And most contracts are never fulfilled in physical metal. They're fulfilled in paper money. So someone's betting that the price will go up, someone's betting the price will go down, and that paper paradigm has ruled these markets for a very, very long time. And because it does have such sway in the markets, it's easy at times to manipulate the overall position of the market from time to time. Some believe daily, I don't. But I'll state it this way, Dave. I don't believe you can manipulate the overall trend. We had a bull market in gold for 11 or 12 consecutive years from 2000 through about 2011. In silver, we had a bull market from roughly 2003 up to 2011, first day of May. And then we have had this correction. We've had this bear market, if you want to call it that, and we've been down in both the metals. But I think the overall trend is still up. And I think that the final leg, which is the third leg, which is the one I think we're going to be approaching here shortly, is the most sustainable and biggest move in these markets. So, yes, manipulation occurs when there's a massive amount of selling in paper in these markets. An example would be selling about 1/2 an annual supply of silver on paper in a matter of less than 2 minutes. And when that happens, the price goes down because, again, supply and demand. So if someone is going to put a sale for everything that's mined in the world in 2 minutes on the exchange, it is going to take the price down, and they know it. So that's just an example of how it takes place. Again, it's explained a lot better in my book.
Thank you.
Say, David, earlier we were talking about the wisdom of buying silver just to transact normal business, but you're probably familiar with those kind of Hershey bar 50-gram. They're about the size of a couple of credit cards stacked on top of each other, and you can just break off a little piece just like you would a Hershey chocolate bar. What are your thoughts about that as a way of conducting commerce?
Well, I think those particularly, I actually have a couple. I bought them in Germany when I was there. I speak usually at the resource conference in Germany. In fact, the person that translates the Morgan Report into German actually is one of the principals at that conference, but that's off topic. I think they're fine. I think they're a little bit cumbersome. For gold, it'd probably make more sense because one of those little chips of gold is worth, I think, in today's level, about $50. Yeah. So, I think gold it's more suitable because, as you said, Steve, it's about the size of a credit card. For silver, I think you're probably just as well off and easier really by using coinage that's known, like junk bags, where you could show a 6-year-old kid in a matter of a couple minutes what a silver dime looks like, a silver quarter and a silver 50-cent piece, and they would be a silver expert within a matter of just a few minutes. Same thing with the cafe that you mentioned earlier. They would know what a silver round looks like pretty quickly, and there's easy tests you can do to determine if they're counterfeit or not. There's very little counterfeiting in the silver world and really not very much in the gold world. It does occur, but it's something that I wouldn't worry about, and especially if you buy from a reputable dealer. So I guess that's word to the wise.
Yeah, good stuff. So, David, I'd like to shift gears a little bit now. We've been talking a lot about physical silver, physical gold, but you also do recommend that investors put some money into mining stocks. So what can you tell us about mining now? Doug Casey recently gave a speech that was not too favorable about the mining sector. What are your thoughts on that?
Well, being a member of the Northwest Mining Association, it's changed its name now, but they have an expression which I think is extremely valid. If it can't be grown, it has to be mined. Mining is imperative to our way of life, just like eating food is imperative for us to be alive. So I equate the two, really. I think that now that we're very cognizant of being good stewards of what is given to us in the Earth's surface, and I think that there's a lot of conscious mining that takes place. I will admit there's some unconscious mining that takes place in certain jurisdictions. I don't have control of that. The jurisdictions do, and they tend to look the other way, China in particular, and they were given this favored nation status. And everybody at the top level knew what they were doing. They're allowed to pollute more than they should be just because they got this quote-unquote favored nation status, which in my view actually is favoritism and really shouldn't be, but that's the way it is.
The man with the gold rules.
Yeah. That's kind of the converse of the true golden rule, but them that has the gold make the rules.
There you go.
That's kind of the way it is. Yeah, sad but true. I was shocked at just how much pollution there is in China. It's absolutely amazing. And, here in America, we have all of these concerns about, ruining the environment and whatnot. And we look to these other countries that we assume are just, closer to Earth. And China has a very, very large a portion of their population that are, agricultural. And it is changing, but certainly a much higher percentage directly involved in agriculture than we have here in the United States.
Speaking about their pollution, it's so bad that a lot of people over there that have money get a passport and they take their kid to college, someplace else like London, New York, whatever, and they're not coming back.
Yeah.
And it's not a great place to live.
Yeah, I was in Vancouver, British Columbia, and there's just about every third or fourth person is from the Orient. So it's pretty amazing. Well, let's have a deeper discussion right after these important announcements. It can be difficult to know the best way to manage your wealth. Hi, I'm Steve, co-host of Smart Wealth Radio with Altmaier and Minnick. I help my clients relieve the stress over growing and protecting their wealth. Frank and Joella are so happy they wanted to share their story.
We lost a fair amount of money in the stock market. For us, we lost about half of what we had saved. Now, granted, we did get most of that back over the years, but at 65, we thought there's no way we have the earning capacity to replenish that. So we found Steve.
We've been relaxed because what he showed us and presented to us is really a no-risk deal.
Frank and Joella, thank you for your kind words. Call me today, 509-32-SMART. That's 327-6278. Helping you to be smart about the health of your wealth. Welcome back to Smart Wealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. So, David, right before the break, we were chatting about that speech that Doug Casey gave that was really not too favorable to the mining sector. And you gave some really good information, but could you just dig a little bit deeper into that?
Yeah, absolutely. First of all, Doug and I have known each other for a long time, and, I'm friendly toward him. I'm not real close to him, but he's a good thinker. I've read a lot of his work, and I know a lot of the analysts that work for him. First of all, Doug said a few good deposits remain to be found, and I agree with that. I mean, that's a fact that, like the oil industry, a lot of the easy-to-get-to oil has been recovered already, and is there oil left in the Earth's surface? Absolutely, but it's more and more difficult. Same holds true for mining. Mining is expensive, absolutely. Why is it expensive? Well, first of all, labor costs, but not so much there. You can go to parts of the world that labor costs are pretty low, but you have oil involved, and I realize oil prices are low. In fact, let me give a quick example. One of the best silver mining companies on the New York Stock Exchange, its all-in sustaining cost about 7 months ago was $22 per ounce. Today, it's $14 an ounce. How did that happen? Well, it happened because oil prices went from roughly $100 to $38. That's how significant oil is to the mining industry. But it is expensive. In fact, right now, the all-in sustaining cost for most miners is above what the current spot price on the silver market is. Time is ticking. Doug goes on to say that in addition to being costly, taking a mine to production requires a great deal of time. And part of that is because miners are increasingly having to deal with non-government entities and all kinds of jurisdictional issues, governments. Sometimes it goes from the county government to the state government to the federal government, not just in the U.S., but other jurisdictions as well. In Mexico, they have a process that's similar to that. So you got to get all these blessings and make everybody happy and sign all these edicts and promise this and promise that. And it takes time. Usually we used to give a rule of thumb of about 5 years to put a mining project into production. I'd say that's probably low these days. It could take up to 10. Yes, there are exceptions to that rule, but generally speaking, I'd figure at least 5 to 7 years. And the last one is volatility. And this is an issue that is very difficult, because if the price of silver or gold is at a certain level and you're looking out 5 to 10 years, how do you project what you're going to do? A lot of projects that looked very good 5 years ago don't look so good today. They've been taken off the books. These guys have gone into different businesses, or they are holding their property on care and maintenance, or they've decided just to pay the lease on it, or they've decided to try to sell it to somebody else and give up on the lease. So volatility plays into all markets, but especially the commodities markets and especially the mining industry, because it is so cost intensive. And you better know by the time you start actually putting ore through the mill that you're going to make money. In today's world, that's very difficult with the price volatility.
Well, and speaking of today's world, all of these things are interconnected. As you said, a lower price for crude oil makes diesel less expensive. And of course, mining equipment runs on diesel, so they're going to have a lower cost for extraction simply because of the price of oil. So everything is interconnected.
So, Steve, we're talking about the price of commodities and that they are really low, and that's usually a sign that the economy is slowing. There's not a big demand because people aren't buying. So that's one thing you can always look at even in the market.
So with all of these things interconnected and interplaying, where do you see, David, the larger economy of the world headed?
I see it for some turbulent times ahead. Last time I was on the show, Steve, I said that I thought that we would see some volatility in the stock market, mostly to the downside, probably in the September-October timeframe. And as we all know, it's actually taken place in August. And markets, as I'll repeat myself, go down faster than they go up. This has been traditional in any market. You can check the facts on that for yourself. I think that the world is very unstable right now. There's instability on all fronts. I'll explain some of the top ones. The first front is the trade mechanism, nation state to nation state. Going back into that archaic realm prior to August 15th, 1971, settlement was available in gold, nation state to nation state. That stopped, and the settlement process is primarily in the U.S. dollar. And everybody knows, almost everybody knows, from top bankers on down, that this stuff is just printed at will from a private consortium called the Federal Reserve Bank, that private corporation that loans the money into existence to the United States government through the Treasury, and the responsible party for paying back the debt is a U.S. citizen. So this is a process that many people have woken up to, and it's beyond control. It's mathematically impossible to pay back that debt. So debt is the big problem. I go through a whole chapter about the debt bomb in the book, and I explain this in greater detail. But the problem is that you either default by saying, you know what, I can't pay you that money I owe you, Steve. And you'll say, well, what can you do? And I'll say, well, here's what I'll do. I'll settle with that $10,000 debt as an example. I will give you $5,000 and these 10 silver coins. Will you accept that? And you say, sure, David, I was wondering when you were going to admit you couldn't pay me. I'm glad to get 50 cents on the dollar. I never want to see you again as long as I live. Goodbye. So that's one way. The other way is, and this is the case of governments, where they will never admit that they can't pay back the money. They'll always pretend that they can. And this is something Jim Sinclair refers to as pretend and extend. They pretend that they can pay back the debt. They'll never admit they have to default. So what they do is they depreciate the currency. So you get paid back. So if I was able to have a printing press in my basement and I had the same issue with Steve, I'd say, yeah, no problem, Steve. I'm just going to print this stuff up and pay you back. But then you realize, wait a minute, he's got a printing press, and this stuff he's printing has got to be is being watered down, minute by minute, day by day, week by week, month by month. It's got to be less valuable as time marches forward. Basically, all banking consortiums know this. Everyone knows this, but they too have to pretend that this is going to be okay. So what happens is there's a currency crisis. And the currency crisis means at some point, Steve wakes up and says, you know what, I don't want to be paid back in that paper. I don't trust it. I don't trust you. I don't trust your paper. I don't trust anything. And that day of reckoning is taking place in my studied view right now. Why do I say that? Because China has been a net seller of U.S. Treasuries now for several months. They're really not buying anything more. They basically hold so much U.S. debt that they could control the market by the amount they sell. Remember, going back to the manipulation, someone that wants to take the silver market down will sell a bunch on paper that will take the market down because there's such a huge supply relative to the amount of demand. Same thing in the bond market. So these are very precarious times, and there's all this geopolitical tensions throughout the world, and it's something that the next war may not be so much a shooting war, although we don't want to rule that out. It could be a cyber attack, or it could be in the financial markets. In fact, that's where I expect the most disassociation to take place. We already saw the stock market go on hold recently. We also saw the circuit breakers stop when we had the sell-off. The circuit breakers mean we stop trading for a while. We take a deep breath and we restart the market and see what happens. And these are these, in my view, are the precursor to what we're going to see ahead. Doom, gloom, or reality. You make up your own mind.
David, this whole area that you were chatting about, some of the big boys are selling paper silver, paper gold. They're effectively driving the price down, and then they go in and buy the physical metal at the lower price. They're really playing both ends of it, aren't they?
Absolutely. It's a fairly well-known technique by the big players. It's, it's very upsetting to someone like myself that thinks it's really unfair, but, is it done? Yes. Does it accomplish their goals? Yes. Is there much that can be done about it? Well, if you had a regulatory body that actually had some backbone, yes, but we don't. They're basically colluding with each other to meet the needs of the banking system or the financial system, and then they're letting these entities that desire that they want to scoop up as much as possible at low prices. It reminds me, Steve, of the end of the Roman Empire that we talked about on the last show. I mean, at the end, senators that used to represent people were actually just going for the spoils as things were crumbling around them, and this is actually a reflection of that, in my view.
You bring up a good point, because one of the people I follow, he knows one of the an ex-joint chief of staff. The risk isn't so much bombs flying in the air. Since 2010, when we went into these currency wars, it's to destroy other countries economically, and our government is pouring all kinds of money in for cyber attacks to protect itself, so the Wall Street won't get shut down, and every other area that's vital to our economy.
Candidly, we have to be kind of doom and gloom sometimes, because that's the reality that we're now living in. But there are some solutions. There are the Plan B basement solutions where your money is protected, whether that's physical gold, physical silver, or one of the 7 smart wealth strategies that Dave and I use with our clients, where you don't have to be concerned. You don't have to be experiencing sleepless nights. You can have the confidence that you're going to have your wealth protected. So do call in, set an appointment with us, at least get a second opinion. Call that number, 509-32-SMART. That's 327-6278. And we're going to continue our conversation with David Morgan, Silver Guru, tomorrow morning. So make sure that you dial in again to KQNT 590 on your AM dial at 8 o'clock tomorrow morning and listen to more information with David Morgan, Silver Guru.
Bye-bye.
The information contained herein is not intended to be and shall not constitute an offer to sell, nor the solicitation of any offer to buy any security. Content is provided for information purposes only and is not to be treated as advice to make any specific investment. Please consult with an independent investment advisor before making an investment decision.